Yes, markets are looking ugly right now, but the ugliness can also mean buying things at a bargain. Alright, it was a rough day across markets yesterday with what started as a rotation trade early in the week turned into outright selling. Your S&P now down close to 3% from all-time highs. The Nasdaq down over 7% from all-time highs. Both of them showing some chunky losses on the session yesterday with once again technology leading the damage. Now, the trigger was a fresh wave of anxiety around AI spending and valuations. Google's capex plan of about 185 billion and then Amazon's announcement of another 200 billion in spending on infrastructure as well as data centers ignited more fear that the industry is spending without a clear revenue payoff. But unlike earlier in the week where technology losses led to a rotation into things like value and cyclicals, yesterday even saw those things getting slammed on the macro side. The week started with great economic data out of the US with solid ISM PMI data, but last night's big drop in job openings to 6.5 million put a bit of a dent in the economic story and saw new concerns about the US labor market surface. Now, as a result, it was a classic flight to safety day with treasuries rallying with a punchy move lower in yields, 10-year down to 4.18%. The dollar, for the first time in quite a while, also showed some safe haven appeal where, despite the ugly data, stayed well supported. Also in FX, the pound weakened after the Bank of England delivered an overall dovish message with a 5-4 vote split, dovish revisions to growth, dovish to labor, dovish revisions to inflation, and also talking up the chances of more rate cuts this year. Now, sterling has held up surprisingly well despite the dovish shift, but the bad news like that, it's tough to argue for upside, and most analysts would expect a drift lower in the weeks ahead. Now, turning to commodities, silver was smashed again, double-digit down day. Gold also falling, which, like we've mentioned many times, is a good reminder that when there is forced de-risking in the markets on the equity side, gold often falls alongside equities. Crypto also saw some ugly price action with Bitcoin dropping around 13% towards the low 60K area, and there were heavy outflows from US Bitcoin ETFs last week as well. So that shows us it's not just a vibe thing going on, it was positioning unwinding as well. So what matters next, earnings and labor market clarity will be important. As we go through earnings season, AI capex will remain a key theme, and next week's delayed NFP data will be a key one to watch on the macro side. Remember, when volatility spikes across major asset classes, it's easy to get swept up in the moment, but these ugly times also opens up opportunities for dip buyers to snatch up long-term bargains. So obviously, watch your six, be careful, but just zooming out on a chart of the Nasdaq will quickly put things back into perspective for you. With that said, hold on to your seats with heightened volatility, and remember, when vol is high, it works both ways, both up and down. So short-term traders, adjust your risk accordingly.